I would say we've had a pretty good run with gold over the last 5 years, and it just keeps getting better. There's going to be some things coming up in 2023 that are going to be very good for gold. Warning, this is not a prediction video. Let's explore. Greetings, members one and all of the Salivation Nation. There's a lot of things that are bullish for gold in the coming year, and we are at the precipice of another Federal Reserve meeting where they were going to be raising rates. We know they're going to raise them, but by how much, there is some debate. We'll find out in days. But nonetheless, that's going to be the backdrop for what we are looking at here, as inflation is running in double digits in almost half of the world, some in triple digits. And that is one of the things that will be very good for gold in 2023. We know that because of that and other reasons, central banks have been stockpiling gold, some by record numbers. The BRICS Plus nations are looking to declare independence from the dollar hegemony, and the COMEX and LBMA are running low in their vaults, especially for silver, but gold as well too. That is something that has been occurring for quite some time, and some of that gold very well could be going to some of these central banks around the world. And the FTX collapse and perhaps other big exchanges in the crypto sphere are another reason, because the crypto market is scrambling right now to hold it together. Investors are looking for alternatives, and they are turning to gold right now. This metal here has never disappointed in terms of its value, and that has been sustainable through centuries and millennia, through any kind of turmoil or through any kind of nation state, culture. It transcends it all. Gold's value is timeless, and that's why people hold it. That's why central banks hold it. That's why the Bank of International Settlements has rated it a Tier 1 asset, up from a Tier 3 asset, putting it equal to and on par with cold, hard cash. And cash, I use that term loosely because really it's a debt instrument, as we all know, these Federal Reserve notes. And on their very own targets, it is devalued by about 2% normally per year. But right now, it's pushing 8% on an annual basis by the last measure. Nonetheless, that's where we stand with the dollar. And so we want something that's going to preserve our wealth, not erode it away. This is why gold is such a good thing to own. And when the price falls, it's a good time to buy it. You know, the adage, buy low, sell high, although the first half is really what I'm about. I'm more about holding the gold than selling it at this point. But buying is certainly an opportunity to take advantage of when the time is right. And the time that is right is when things are low in the market. So the pressure on the Fed to not take us into a recession is growing. They are walking a very thin line, folks. A very thin line between a low unemployment and high inflation, or high unemployment, stagflation, or to try to keep the dollar together, because we know that in the immediate term, a falling dollar and bond yields means that gold is going to go up. Whereas when the dollar is strong, bond yields are high, that's going to put pressure on gold. And that's the type of thing that they're doing. And many people don't think that they have the guts to continue at the rate they're going, which is why many feel that they're going to take a step back and ease on their hawkish stance. They're going to become a bit more dovish and only raise rates by 50 basis points. That's half a percentage point. And let me know what your thoughts are, if they're going to do a half of a percentage point or 3/4 of a percentage point. If they go back, that's going to signal a potential pivot that could come as early as the middle of 2023. What will a pivot mean? That complete turnaround where they essentially will start to do quantitative easing again. The confidence in the dollar could tumble. as we start into quantitative easing 5.0 when that takes effect. We've already been in 4 rounds of quantitative easing before they started tightening and tamping down, but nonetheless, they very well could pivot. And then we've got QE 5.0, and then all bets are off, in my view, for the dollar, because it's such a very volatile time that we live economically. Geopolitically is a whole nother scenario. And that's another thing that could be very good for gold in 2023. Increased geopolitical tensions, not only with Russia, but we also have the situation in Taiwan that is starting to bubble over here, and other factors as well too. Domestically here in the United States, we are seeing attacks on our electrical grid in the Carolinas right now. There's 2 incidences that have occurred recently. So those are the kinds of things, and little mini black swans that kind of make their way through, that all could be very, very good for gold as we head throughout the year. But before that happens, if inflation is under control and we get confirmation in the December meeting, it is equivalent to the Fed encouraging the public to buy gold for the first time ever. In other words, if they do that more bullish rate hike to 75 basis points, that's a good idea for us to buy gold. And more people are buying gold these days, and that's definitely a good thing to have it in the physical form right here. If we've avoided the rough recession playbook, the mass layoff playbook, and the Fed won't make the error of over-tightening, then we're 3 weeks away from the most important bottom for gold stocks in years. And that's the other area where we're talking about here, because you can hold the physical metal, and I strongly encourage folks to do that, but there's other ways as well too. That means that getting ahead of this could spell 800 or 900% returns in mere months, not decades, if everything and all the stars align in such a way. And that brings us to the sponsor portion of this video to talk about one area where you can take advantage of these types of situations with Gold Mining Incorporated. That's the New York Stock Exchange, ticker symbol GLDG. And they are the leading company in the Western Hemisphere for gold acquisition and development projects. They take advantage of market downturns to make bold acquisitions. I've seen that time and time again. They're very smart in that way. Their balance sheet is vibrant and healthy. They have a market cap of $210 million. Gold Royalty is a position of over 20 million shares valued at $50 million. And subtracting these numbers, which includes their multi-million dollars in the current market cap, gives us $160 million. The company owns 32 million ounces of gold equivalent resources, and they have no debt. So if you divide those numbers of ounces by the 160 million, it gives a remarkably low of just $4.93 per ounce of gold, which is a great deal considering most deals this year in 2022 are averaging $30 per ounce. So you are paying 83% below the market price when you buy shares of GLDG. The flip way to think about it is that if gold mining 32 million ounces were priced like the average, the company's market cap would be about $1 billion when you do the math in the opposite direction. So it's a tremendous value. Amir Adnani, the company's founder, knows this. He has a huge personal stake in shares, and also so does Rick Rule, Martin Cantusa, and Doug Casey are also shareholders, and they've been for quite a while. And when you take into account Amir Adnani's uranium companies that have been huge winners over the last 2 years and have profited as well, Uranium Energy Corporation and Uranium Royalty Corporation are up over 400%. And so how does gold mining stock perform? As an example, when gold spot price rises, this is where the magic really happens with this stock. It's pretty amazing. From December 2013 to March of 2014, it went up 164% compared to spot gold, which went up 11.49%. That's a 10% leverage. From January 2016 to September 2016, the stock went up 665% compared to gold spot price which is 22.65%. That's a 30-time leverage. That's massive. From December 2018 to February 2020, it went up 150% compared to spot gold, which is at 26.01%. That is a 5 times leverage. And finally, from March 2020 to August of that same year, it was 218% compared to gold's spot price increase, which was 36.12%, which is a 7 times leverage. That is remarkable. The analysts give a price target 200% higher than today. It's the way things are going now and how volatile things are. We are in for a more bullish ride, I think, for gold in 2023 than I think we've seen in quite some time. Pretty remarkable to think about where things are going. And to sum up, Gold Mining Incorporated was created to unlock the value of the Whistler Gold Copper Project in Alaska. They have one of the largest portfolios of gold and gold copper resources of any junior explorer and developer. They have an experienced management and technical team that has only been strengthened through the years. They have no debt, and they have a very strong balance sheet. And I encourage you to check out their website so that you can see all the latest news on the drilling results and the latest development and exploration that they have been doing. But as is the case with any kind of mining company or any investment strategy at all, I encourage you to do your own due diligence and research, and encourage you to check out their company, and feel free to contact them with any questions that you may have. But I think there's a lot of potential here, as they've done very well. There you have it. Let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.